record. We're almost there.
Jess, can you shut my door? Thanks.
All right. Welcome back to Boss Uncaged podcast. So Tony and I had like a little sidebar conversation off air, and we were talking about like the meaning of this particular episode. Like this episode is going to be so educational for so many different listeners and viewers that are listening to this podcast right now. We're going to give you so much insight and information to the market, but in a particular niche of the market. And for my son, this is the opportunity for him to get I always say these lazy teenagers to get their butt up and actually learn something from this content, because this episode is talking to them as well. You know, I like to give whoever I'm interviewing a particular interview, and looking into Tony's background, he's done a lot of different things, but I would say like the best nickname for him is going to be the Navigator boss for obvious reasons. So why don't you start navigating and telling us a little bit more about who you are and what do you want to talk about today?
Yeah, sure. I say, well, thank you for having me on. I'm really honored to be part of your, thought process and the content that you're putting out. So thank you for that. TG Macro is a company that I started in 2016 after I got tired of playing pickup basketball with my Wall Street career, which is something that I did in the last 3 or 4 years, where I went to 3 or 4 different shops and didn't really, find a comfortable home. The only thing that was constant in moving along there was my client base that was very loyal to me and the sort of process by which I follow markets. And so I decided to break that out with the guidance of several of my mentors in the market and launch my own publication, my own newsletter called The Navigator, which I launched on Election Day in 2016 with the view that the world was going to change dramatically, and that content creation for finance was going to change dramatically, and that a door would open for individual content creators. And as you can see, that's something that you benefited from, and that has definitely been the case since then. What's been really, really rewarding is really in the relationships that I made along the way, in whether people have seen me on, a podcast or on Real Vision, which is a platform that I contribute a great deal to, and say that, I like the way you look at markets and I'd love to see some of your work, and I can start a conversation with any professional or anyone that's interested in markets, since that's kind of my number one professional driving force, has been following the markets and figuring out methodologies of keeping track of what's going on, figuring out correlations, and then eventually translating that into making money trading for my own account, which is sort of the other part of the backbone of what I do here. And when I put it together, I'm able to, I guess, my sort of, if I were to take from comments that I've got, positive comments that I've gotten back about my writing on the market, I would distill it down to people have said that I have the gift of, making complex markets a lot more simple for them to understand and give them some direction as to what they should be watching for things that are going to drive markets. So when you put all of that together, I would say, now in my 7th year of publishing and writing the newsletter that goes to about 800 professionals on a daily basis, I've learned a great deal myself, and my craft has probably gotten a little bit better since when I started. So we can pick off at any leaping off point that you'd like there and drill down into whatever part of that history you care about.
So, I'm hearing all the things you're saying. And again, I think to your point, I've read some of your testimonials, and it seems like you have the gift of taking something as complex as tickers, bull, bear, all these different random terminologies and simplifying it. So, and I think that you specialize more so in futures. So I want you to talk about the average user, to give them a little bit more comprehension of how does futures even fall into it? How is that even related to stocks? And how do you buy and sell and trade that?
Yeah, so if you want, the way to look at futures really is to just basically look at commodity futures as your sort of base markets, right? Because that's what futures markets were born from actual physical commodity traders that had the necessity to price out commodity risk farther out the calendar than today's spot market, which is the market that takes place, right immediately in the future, where you can buy and sell corn, buy and sell oil, buy and sell natural gas, or any of those commodities, right? The futures markets were created so that traders, investors, and portfolio managers could buy and sell futures of those commodities or lots of those commodities at a future date, right? So it was basically, for example, for the necessity of if you're having a fall harvest in the grain market, you want to be able to have a fall contract that you can buy and sell grains with so that you can manage the risk of that harvest against that grain contract. Similarly, if you're an oil producer and you have, an oil project where you're drilling oil that's not going to come out of the ground for, several months or years down the line, potentially, you could sell a futures contract out to that date and hedge some of your production risk, right? You would hedge that risk against the price going down in the future. And that's essentially how commodity traders look at those markets. So there's a number of different ways to trade commodity futures. They're all traded on a futures exchange. And, they're all set up with various different delivery dates for those commodities. And I guess it's, from a starting point of having, the most broad conversation we can about it, a future is an agreement to trade a certain commodity at a future price delineated by an exact point in time, for that price. So a commodity at a future point in time for a price. And so as you can imagine, the futures contracts have got to have a relationship to where the spot price is, right? And now we're getting a little bit more technical, but this is really the nuts and bolts of how commodity traders look at the world, right? Every commodity, because it has futures out on the calendar, is going to have a curve, which is going to be the price that the market sets for those futures out on the calendar. So you can look at a market like crude oil right now, where the spot price is higher than the futures prices out the calendar, meaning that the price in the immediate time frame is more dear than the price in the future. Right now, there are other commodities like I guess gold is a little bit contango now, and a few others where the commodity price in the current spot price is below the futures price. Right? So there are various factors that play into things like that, like interest rates and forward production curves. And we're getting a little bit technical again, but that's generally the basis of how a futures contract works.
So, I mean, based upon that definition, and there's some key words that kind of overlap with options. And so I want you to kind of talk about like you're turning over time. So anyone that knows anything about options trading, essentially it's a time play. You're waiting to short the stock and leverage all that. So like, what's the difference between futures and options?
Yeah, so a futures is a pure agreement where you are actually buying the contract at a price out in the future at a certain time, right? An option is another tool for you to use. That's another product entirely, okay? An option is the right to purchase or the right to sell that commodity at a certain price out in the future point in time, right? So that price is in market volatility and time decay. So now we're getting a little bit more technical for sure, but an options price is usually a way a commodity trader can lever his risk into a commodity trade, right? Where if you want to say that you think the price is going to go to $2 and commodity is trading $1.50, you can buy more of that commodity in value of $2 calls than you would be able to buy the underlying commodity, right? So that's where your leverage play is there on options.
So, I mean, obviously all these things, we spin out all this terminology. So like, let's bring it down to a little bit more layman. And again, you have a series 7. So like, just talk about it from a suitability standpoint, right? If you're talking to someone, like, how are you going to verify that they're suitable for a futures contract?
Well, that's something that's sort of something that is determined by your wealth manager. Right. That's someone that, where someplace where you hold your account, or even if you do it online nowadays, if you opened up an account with Interactive Brokers, you would have to take a couple of tests to prove that you had enough knowledge about markets to be allowed to trade options. Right. It's not something that you can just plow into and start trading. You do want to have some kind of expertise in that field. Right. So It's a little bit more complicated than trading futures. And I would say it's probably the most complicated and most risky way to invest. And for example, I don't ever use options to trade ever for any reason anymore. Yeah, it's something that I've obviously experimented with. I've never got too heavy into, and I know that there's a lot of money that can be made in options trading. It doesn't suit my style at all. I take usually every year, I start with an amount of money and I try to grow that pile of cash using, by buying and selling different sectors of the market at different times and trying to be in the right place at the right time. Not as much trying to lever my bet to have, a play that has directional risk, price risk, time risk, and volatility risk. Right. That's just a little bit more complicated than I like to go. I like to buy passive ETFs, right, with cash and be in the right sectors that are performing better than the other ones. That's a little bit of the secret sauce behind my trading. I really carefully manage and follow the individual sectors and their performance and where they are technically on the charts. And I make my decisions of how to allocate capital that way.
All right, so let's flip it, right? So I mean, obviously you're saying that one is not necessarily as suitable because it's high risk, and also you're doing futures. So I would say futures is very parallel to then stepping into Forex. So let's talk about, okay, this leveraging currency versus leveraging gold or oil. What's the differences between those two factors?
So they're going to be the same as, what they do for what we'll call financial futures. Which are going to be futures on things other than commodities, right? Where you have a physical commodity that's usually coming out of the ground and they have standard size contracts. What they do with FX and in the credit markets and bond market, for example, is they sort of financialize those securities and they'll say, okay, we're going to have a currency future that you can trade. And for example, it's going to be the euro currency that you're going to trade. We'll let you trade the euro currency. We're going to price it in dollars. Each contract is going to be worth this many euros per dollar that you're going to be able to buy. And the amount of leverage that you're going to have to put up, or the amount of cash that you're going to have to put up on margin to buy this contract, is going to be this much, right? So they kind of turn a commodity or a bond into they turn a currency or a bond into a commodity by taking a specific amount of it and attaching a futures price and futures specifications to that item. So they'll make a yen contract, a Canadian dollar contract, a Chinese yuan contract, a 10-year bond future contract, a 2-year bond future contract. And so then now you've got all of the financialized securities available to trade as futures as well.
Got it. So have you ever seen a movie called the Limitless movie where the guy took the pill?
No, I haven't seen that. I'm not a big, I don't watch many movies. I'm not like a Hollywood buff or anything like that. I watch all documentaries.
When you get a chance, you want to check out that movie, because I mean, obviously he kind of stepped into the market and it was a pill that allows him to kind of see beyond what the regular person. So right now, I think you and I are both on the Limitless pill right now. Like, we're having this really in-depth conversation about the market. So I want to just pull it back and make it a little bit softer. So, I mean, based upon what you're saying, would you say, are you helping the individuals with suitability on the long term or the short term plays?
Short term. I'm much more of a shorter term oriented trader. I like my perfect, I don't necessarily limit my time horizons, but the average time horizons that my trades last are like 2 days to 2 weeks. That's generally like the length of time that I'm in something. If I get something really right, because of the style of trading that I've employed and some of the systems that I've employed that allow me to stay in that trade, sometimes the time horizon goes longer, but that's only when I've got something really right and it's really going in my direction, as in it's really trending and price is driving in one direction, and I've got that right. So at that point, as it goes my way, I can raise the level that I plan on getting out accordingly. So as you can see, that at a certain point, you first lock in a break even, and then as the security keeps trending your way, you can actually lock in a profit even when it backs off.
I think that kind of goes hand in hand with one of the taglines that I've seen on one of your pages. I mean, built on risk, accountability, and rigor. So I want you to kind of break that down to help the audience understand what, because I mean, you're talking about a particular contract that is not going to be any contracts, right? We're talking about a
Yeah.
significant amount of quantity that you're putting into the market to get that short-term return pretty quickly. So I want you to talk about the accountability and the risk factor.
Yeah, being sort of what we call risk accountable is essentially looking at your portfolio and any risk that you have on, any positions that you have on, and looking at the markets and saying, okay, given what's going on in the markets, what is in danger of losing value of the things that I own, right? And for what reasons? Now, there could be a number of different reasons, right? So say we were long the S&P right now, right? We're long the stock market. What are some of the things that could happen in the world that could help us or hurt us? So for right now, what the market seems to be responding to is getting to the end of this rate hiking cycle and the idea that yields can eventually go lower, right, at the Federal Reserve, where they may be able to ease monetary policy. Stocks love low rates. Tech stocks really love low rates, right? The reason being is that tech stocks are growth companies. And if you have a growth company and you can borrow at zero, you can invest ad infinitum and try to grow that growth company, right? As rates go higher and you have to borrow money at higher rates, now you're cutting into your margin for growing that company. So that becomes a headwind. So that's just something to keep in mind here if we talk about the idea that when rates go lower, tech stocks can rally, right? So it's the kind of thing where I want to put onto my readers, if I see a trend where yields can be heading lower for a certain period of time, I can say to them, hey, a good place to have risk right now is likely in tech stocks. And that's one of the trades that I had on earlier this year. When we saw a change in the rate cycle go from potentially more hiking to potentially more easing, the first thing that I guided my clients into was to buy the NASDAQ just to have broad tech exposure, and then to buy semiconductors because that showed me that that was the sector that was outperforming all the other ones, saying this is where you want your money. So when you're in a situation like that and say we're in this trade and we bought tech stocks, now I want to be on the lookout for my risk. What's my risk? Rates going higher. Right. So now I want to have an eye on the bond markets. And, there's more nuances than just that, obviously, SA, but we can keep it at this very basic level right now. Yeah. Where if we're in this long tech trade and we're making some money and something comes out that's very inflationary, an inflationary piece of data, right? Say CPI is higher than expected. What will happen is the market will adjust to that by moving rates higher. Bonds will sell off. What would that be? A risk to the tech stocks that we have on. So that's where you're always trying to sort of accountably look in the mirror and look at your pad and look at the markets and pull them all together and say, okay, this can help me or this can hurt me today. And that's what I've got to be watching. Right. So a lot of times you'll get into that positive feedback loop where, just to use the same example, because it seems to be working, if rates continue trending lower, NASDAQ and tech stocks continue trending higher, that's a correlation or a feedback loop that we can look for to continue, right? So it might be a situation where something happens and we say, hey, we only thought rates were going to go this much lower. This data point makes us think rates are going to go a lot lower. We should buy more NASDAQ, right? So let's increase our risk there if that's what we think is our view. Right. And sort of having an accountable view in those sort of now, obviously, we can trade anything on the board, right? We can trade dollars, we can trade interest rates, we can trade stocks, we can trade commodities. And those things all interplay off of each other. And that's the sort of macro picture is how all those things work and trade versus each other. And my job is really to sense when sectors are going to start changing value against each other, and we should start pursuing a move in a certain sector. Right now, I've got some clients out of that technology trade, which I feel has peaked, and we've bought some natural resources stocks, which have dipped, So I'm kind of now looking for a little bit of adjustment where tech backs off and natural resources rally, because that's been the opposite of what's been happening all year. So now we've got a little bit of a pivotal moment here where I think that could change. So we're kind of changing the sails a little bit on our trading positions.
I think, I led you into this trap, right? I wanted the viewing audience to realize that you're a mad scientist, right? like you built up this equation. You talk about all these different things. So I want to time travel back and talk about. I think that you've been plotting this world dominating situation for a period of time, because your degree is in like agricultural business and management, and the average person would be like, well, he's talking about the market. What do these have to do with each other? But I'm like, well, think about it. He's selling commodities. So if he understands corn, if he understands those aspects, you have the damn cheat code that most marketers don't have in your seat. So I want you to talk about that. Was that premeditated, or did you just kind of grow into it?
That's a great question, SA, and really, really a great observation is that, you've tapped into, whether I'm right or wrong, you've clearly tapped into a sort of level of market intelligence that is maybe more precise than the average bear has, right? Something just more than the local guy on the street might have knowing about markets. Where does that come from? It comes from sitting in front of the screens, staring at the same markets for decades at a time now, right? It comes from, I know you can barely see in the picture, but I've got 8 little windows right here. And in those windows are short-term charts on the dollar index, 2-year yields, crude oil, gold, copper, the S&P, the yield curve, and natural gas, right? So I'm confident. Now, I've been staring at those same 6 screens since shortly after I got out of college in 1990. Same 6 screens every single morning when I wake up until the market closes. Now, as you can imagine, you start to notice relationships. Oh, wait a minute. When that thing goes up, this thing goes down. Whoa, when this thing goes up, that thing goes down, right? And you start to say, oh, okay, I see how these macro gyrations are going to work. So you put all those observations together, you start learning how things trade versus each other, writing down the observations that you've made and taking copious notes. Another part of my system is every single day, week, month, quarter, and year, at the end of each of those time periods, I sit down and I take a snapshot of the market. And I say, okay, what just happened? What's moving? What's going up a lot? What's going down a lot? Why is that happening? What is it likely to cause? So gaining that experience over 3 decades with the overlay of constantly looking at the same things, same securities, commodities, interest rates, currencies, and stocks, and how they trade against each other, you start to put together almost subconsciously a matrix in your head. Okay, now what I see is rates are traveling in this direction, the dollar is going in this direction, you know what I mean? And you start to sort of put the world view together. And at times, not all the time, in fact, not more than a couple of times a year, the stars all line up to get into one trade. And here to give you a great example and a very simple one that a beginner trader can understand. Last year, the year of 2022, right? We had a situation where technology stocks had been soaring because rates were low for a long time, and commodities were very depressed because rates were low and there wasn't a lot of commodity demand. Then we had a situation last year coming out of the pandemic, et cetera, the lockdowns, where interest rates were trending much higher than we'd seen in years. So at the beginning of the year, I made a bet that I thought interest rates were going to trend higher. And I thought that what that would mean would be that the NASDAQ and all the big tech stocks that everybody's been long for all these years, those are going to have their pullback moment. And some of these natural resources stocks, which have been floating along the bottom of their range for years and years now, those stocks are going to pick up and those are going to see some life because commodities have begun rallying ferociously, right? If you remember, not too long ago, crude oil gasoline went from about $1.75 a gallon to almost $5 a gallon.
Yeah.
Right. So there were a number of reasons that caused that, but that inflationary move changed the pace of interest rates and had a really steep spike in interest rates. So at the beginning of the year, I went out with this call and said, listen, tech is going to be a bad performer this year, likely to go down. Natural resources, commodities, inflationary things like that are likely to go up. And essentially that's what happened. By the end of the year, the NASDAQ was down about 30-something%. The Bloomberg Commodities Index was up about 20%, and some of those associated sectors were up 50 and 60% on the year, right? So that was just a prime example where the stars lined up. We saw a move being telegraphed in the markets, and we made the associated bets that went along with that move, and they worked out. So it doesn't always work. You don't always get the view that, rates are really going to move this much, or that you're going to get that catalyst that's going to drive the markets. And when you do, you don't always get into the right trades. So there's a lot of multi-dimensional risk here that I try to help boil down every day with my publication and sort of keep people driving in the right direction.
I think the last line that you said about the stars lining up is a phenomenal segue to talk about, like, everyone that's familiar with stars are familiar with Orion's belt, right? And I look at you as being the middle star and your dad being the first star, and then whoever else comes after you is going to be the third star. So I want to talk about, like, I would think at this point in time, you could probably either kick your dad's ass in the market and make him extremely proud on a day-to-day basis, or you guys are working together. So I want to talk about you growing up in a household to where your dad was essentially on Wall Street trading. So this is ingrained in you. I mean, you're talking the talk, you're walking the walk, but you were kind of bred into this a little bit.
Oh, 100%. I say, one of the things that I noticed about my dad when he came home from work was that he was full of energy, bursting with excitement. Sometimes, had tremendous anxiety, but he always really cared about what was going on. And he really cared because things were moving, and it was a really frenetic pace, and it was really competitive. And I could tell that right away. And, that when you notice that that's the sort of mode that he's in when he gets home from work, you're keenly interested to see what the hell went on that, got him this riled up or excited or angry or whatever it was. But there was always a wave of emotions that he was carrying. And what would come out of dinner conversation was a conversation that at the start I didn't really understand, but he would talk about what happened during that day and where he bought the stock and it went down, and everybody sold him more stock and it went down lower. And he lost more money, right? Those were the bad days, to the days that it went the other way, where he went out and bought stock from a company, it went up, and he went out and he bought stock again, it went up, and he made money, et cetera, et cetera. But he was a dealer, right? That was obvious. He was always buying and selling, and there was always a flow of traffic. And it was kind of his job to figure out which way the flow was going so he didn't get run over. And by the time he sat in the same seat for 30 years, and you could see over time how he got more relaxed and more comfortable with his job, and, had a lot of foresight as to what he thought was going to happen, and started talking about things like that. And, that sort of dinner table conversation about, understanding what risk is, and understanding, what a moving market is and what a bid offer is by the time I was 10. That was really instrumental in what I wanted to do, when I grew up. So I went to Cornell and studied. I went to the College of Agriculture and Life Sciences to get a business degree, and literally learned, took classes like farm management, and started to understand, what the farmer did when the dozen eggs popped out, and how he got those to market and got those paid for and used that money to invest in his farm. And so that was the sort of natural building blocks as life, progressed for me. And when I got out of college, I was just hell bent on getting a job on a trading desk. And at the time, everybody would have told me that was going to be too difficult, and you have to start in a back office or try something else first and then try to get into trading. My dad always guided me to keep my head down, get a seat on a desk, helping somebody, and that you would learn something. And so from there, I was blessed enough to run into a couple of mentors at a few different places that I worked as a young guy that took the time to sort of put this puzzle of what these things mean when they're trading in different directions and understanding why that happens, and then come full circle to a point where, I spend all of my days and nights watching markets, and people now pay me to consult with me to help them assess their risk and help them figure out what trades they should be in and where they should be parking their money or where they should be running from and getting their money out of. So, it really has come full circle. It's been an unbelievable journey. And I think it's really just one of those, I really think it's one of those Malcolm, what's his name? Malcolm, Gladwell. Yeah. The 10,000 hours thing, right? Where if you do something for 10,000 hours, you're going to become an expert at it. And if there's one thing that I've done, right over my career, I probably have 100,000 hours of writing about markets under my belt. So it's just something that I've always done from the beginning. I've been diligent and rigorous about it. And I guess you kind of go from writing in the dark, not essentially understanding what you're writing about, but sort of getting your ideas together, to right now becoming what I would call a little bit more of an enlightened writer, where I'm writing about things and I know the point where I want to get to, right? I want to set up this note today to get people to understand, because this just happened, gold is going to come under pressure today. Or because this just happened, tech stocks are going to rally today. And sort of with the basic building blocks of understanding those different trades that are developing around the markets, it gives people a sense of sort of, where they could be more or less confident having money. And that's really my day-to-day job now. So you're right, it has been, I learned from my dad. I absorbed all of his, character and made all kinds of observations on how he lived through this career. And it was intriguing enough for me, being, average athlete, that I liked being competitive. And I thought going to work in a competitive environment would be more exciting and make the time pass. And it sure has gone that way.
I think, like how you're looking at patterns, I want you to kind of like step out of yourself and look from the listener's point of view to the patterns that you're describing, right? Like you have a history of growing up in a household to where your dad was on the market, right? Then you went to an Ivy League college and got the inside, the cheat code for the market. And then you actually work for a hell of a name brand of Goldman Sachs. So the pattern recognition of where you are and where you're going is obviously on a phenomenal track. So I want you to kind of put these two together, and like, how are you using your life experience, the patterns that you see online, and it brings us to what you're selling right now into your morning Navigator package. Like, how do all these elements come into that package and deliver to your clients?
This is amazing, SA, because there's such a specific and definite answer to that question. And the answer is technical analysis is the intersection of where this all comes together, right? And technical analysis is sort of the backbone. It's a separate skill that I haven't mentioned at all yet. But it's sort of like a skill where, I don't know, a carpenter may also be great at making molding, which is a little bit more technical, right? And you can have fancy molding up in the corner of your walls, and that's kind of a little extra added touch on top of, building a room, right? The molding is a little bit of a specialist, right? So if you add the technical analysis skill, which is kind of like having that sort of specialist skill in your pocket as a tradesman, that's where the overlay of taking risk becomes much more obvious, right? So I'm a guy that has made technical analysis really easy, right? I look at a chart, right? A daily chart of a security over a certain period of time. Let's call it a 1-year chart, right? And I've got that 1-year price chart in front of me. Now I'm going to start to overlay some moving averages. I use very simple ones, 50, 100, and 200-day moving averages. And you can see how those are just going to be the averages of the price over those days, where the 50-day or a low number will be very close to the last sale of that security. And the 200-day will just be a very vague sort of path showing you the direction that it's going, right? In a very subtle, shallow manner. Now, there's a lot of science behind that, a little mathematical science, et cetera. But securities really interact very obviously when they trade through those trend lines, right? Sometimes it's a self-fulfilling prophecy where something that's trending higher pulls back to its 50-day moving average and holds and rallies again, right? Something that's in a steep uptrend holds that 50-day moving average, and things like that can happen for years at a time, right? Markets can trend for longer than anybody fading them can remain solvent. So that's something to keep in mind. But so the technical analysis, to get back to the heart of it, is where I can say, okay, I see a scenario here where technology is going to go up because I think rates are going lower. Let's take a look at the technology chart. Is it above or below its moving averages to start, right? So now I can get a handle on, is this thing oversold or is it overbought, right? Then there are some other overlays that do exactly that. If you have a trading system, you can use things like relative strength index and stochastics. And those are studies that you bolt onto the chart that mathematically tell you, but visually, whether that security is oversold, meaning sold down too low, or overbought, meaning bought up too high, right? Probably adding extra value there, or something being undervalued. And so when you get used to watching things trade, what I consider myself being good at is a breakout trader. So this is what happens to securities that are trending, SA, is they trend higher from the bottom left to the top right-hand corner of your screen, right? At some point, they break down and they pull back in the trend and they hold a certain level, and then they keep trending again and make a new high, a higher high than the last one, right? Because they're kind of just going like this and making new highs. When you study those moves and when you study securities that are trending, you notice, oh, this is a level that it holds, right? And that level is dynamic and it moves with the market, right? So with that, you can sort of decide if a security is holding that trend or if a security is about to break that trend by curling over and trading down through another set of moving averages. So I gave you maybe a little bit of technical stuff that's not that easy to understand just from listening to it. But if I drew a chart and put it in front of you and said, look how this security is holding its moving averages and showing one that's breaking down, you would say, oh, I got that. And when you see that pattern over and over and over and over again, it doesn't matter what security you're looking at, whether it's a bond, a stock index, or a currency, doesn't matter. All securities are going to trade, right? They're either going to trend or consolidate, one or the other. Right. And identifying when something comes out of consolidation into a trend is a great entry point for a trade. Right. And so that's where, there are studies that I do that, I identify securities. Am I consolidating? Am I trending? And where are they in that consolidation or in that trending period that might give me an opportunity to trade them and make money? Does that come together? Audio,
it comes together, and I can even pull it together. I mean, if anyone had an opportunity to look at your website, and I want to talk about your branding based upon what you said. I mean, like I'm gonna paint this picture. His logo is a compass with a ship inside, right? Hence why I called him the Navigator boss. But I want you to think about, if you look at his hand motions, he was building a wave. And I want you to envision him being the captain of your ship with your goal in the bottom, and he's riding these waves to help you to get from shore to shore. That's what I see visually when I see your logo, more of the in-depth psychological aspect of it. But the one question I have about that logo, and I want you to tell the listeners, is like, why did you choose red for your main color?
Okay, so this is kind of a funny thing. Number one, the two teams that I played for in high school and in college were both red uniforms, right? My Chaminade High School was red uniform, the Flyers, and Cornell's mascot is the Big Red. So I always wore a red uniform, and so that made me comfortable with the color. But more importantly, I started this in 2016 thinking that the world was going to change dramatically. And I was right about that. It had to do with Trump winning the election and things really changing. But what I wanted to express was, it used to be bad luck if you worked at a big trading house to use any kind of red ink anywhere on your trading blotter or on your pad. You were like, dude, that's a red pen. Get that thing out of this room, right? That is bad luck. No red ink in here. We don't write on red in anything, right? But what I wanted to do was kind of turn that on its head because in the new world of content creation, where the individual mind is really where the value is, not necessarily the name on the front of the jersey in this case, we can write in red here. And because it's my favorite color, that's the color of my logo, and I'm going with it. And we're breaking the old, norms and chains of having to, sit in line and sort of wait for getting attention from a big giant, white shoe, sort of, maybe discriminatory shop where, not everybody in the world can show up and get information about finance. We're trying to democratize all of that, right? And make it available for everybody. I go on Twitter and I put some of my views on Twitter, put very accountable views up there and say, yeah, I'm bullish oil because I think this, and this. And, that's just one man's opinion, but, that's something that you can sort of base some decisions off of, right? And the navigation part is really knowing, to me, thinking of markets as navigating them is a way of thinking of them as surviving through them, right? Markets can be really treacherous and really dangerous. You can lose a lot of money really fast, right? And it's something that you have to really respect. If you are navigating properly, you're getting out ahead of that risk and you're not letting your book blow up. And you're not letting yourself lose all your money because you're navigating. And navigating means, the first rule of navigating is you have to live to sail another day, right? You have to live to trade another day. So you never want to sort of put yourself in account existential risk, right? Do I have risk on here where a bad move can blow up my account today? Yes, I do. I have to cut down that risk because my goal is to trade another day. And if I wipe out my account, I've got nothing to navigate, right? So it kind of has to do with staying alive in the markets over a long period of time, whether we're going up or down, everything is navigable, right? Markets aren't final, and markets, whether you step into a market and make $1 million one day or step into a market and go broke, the market does not care. It is going to come back the next day and do the same thing with or without you. Right. So looking at it from the position of, I'm going to be a navigator on a ship that is on a long voyage, meaning the entirety of my life that I get to make financial decisions. I've got to navigate that ship and I've got to live through all the storms along the way. And if that means taking less risk at certain times, so be it. If it means taking a lot of risk at certain times, so be it. Right. And having the experience of 30 years of watching those same 6 screens and how they interact with each other, or 8 screens, that increases your chances of knowing when it's right to bet big and knowing when it's right to be out.
I think that's a phenomenal, like the way you're defining that. So I want you to talk about it from the standpoint of, multiple levels of history, right? Overlapping paths. And now obviously you're the captain of the ship, you're cruising down, but is there any opportunity in your journey to where there was a fork in the road that if you can go back and change or adapt or modify, when would that be and what would you change?
Yeah, I'll be honest with you. I wish I started out on my own earlier. I divided my career up into 2 halves, where the first 10 years I worked for big banks as a commodity trader. The next 10 years I worked for big banks as an equity trader, an equity salesman, essentially. Where I sort of took my background in natural resources and applied that to equities and was able to have a little bit of an edge over some of the other pure equity salesmen. The one thing that I had wished is, I spent a lot of time, working for big places where I knew that clients of those places were paying me because of my market acumen and not as much because of the shop, but the shop made it a convenient place for them to pay. So there was a little bit of a balance there, but that balance came with, giving up a little bit more of your freedom, right? You got to show up at that shop every day. You got to walk the walk, be part of the hierarchy. You're there from 7 a.m. until 5 o'clock at night, and then you get to go home, right? When I finally went out on my own, I started studying the markets a lot harder because you take away all of the hierarchical rules that you have to pay attention to when you work at a big shop and all the wasted interaction and the wasted time at meetings and all the nonsense, and you strip all of that away, and it's just you versus the market every day, right? And it's you putting yourself up to the challenge of figuring out where your money should be and helping other people figure that out. So I had gone, once I started in 2016, I built a much more serious spreadsheet for following markets because I had more time to manage it. Right. So I went from having a spreadsheet with 8 or 10 line items that I would watch to now having a spreadsheet of 50 line items. And I'm gonna take a snapshot every week, every month, every quarter, and every year of all of them and study how they all trade versus each other and take notes. Now, starting to do that in 2016 and having years and years of data built up that I've been following, as you can imagine, trades start to jump out more obviously at you. Just from having that whole matrix of having followed all of these securities and how they work, it's easier to come up with trade ideas. And the more trade ideas you can come up with, the more places that you can find trades on the board, the more opportunities you have to make money, the more opportunities you have to find the one that's the one big one, and things like that. So I guess I would say that I wish I had instead of doing all that jumping around to 3 different shops, or maybe even earlier than that, I kind of wished I had gone on my own, because I would have had a longer track record of having this market following process and would have been a little bit farther along with it by now, because it's really starting to pay off. It's really starting to pay off after 6-7 years of being intently focused on it. So that's one of the things, I guess, that I wish I could change for the better if I could, SA.
I think one of the things that you said was trade and board, and it kind of made me think about a chessboard. I mean, obviously you're trading pieces to upgrade to kind of win the game. So if you can kind of think of yourself as just 3 to 5 words, right? And I want them to be something that's singular words, like, a rook or a pawn or whatever you want to talk about the chess pieces. Which 3 to 5 words would identify who you are today?
Wait, do I have to use chess pieces, or I can just use words?
Just words.
As a professional, accountable risk manager jumps out at me.
Okay.
And I know that's just picking 3 words and putting them all together.
Yeah.
But that kind of that brings it all together for me, because that's really what I've got to do every day is adjust for new information and make decisions based on that. And those decisions have to do with managing risk. So, the more accountable you are, the more serious you'll be taken by potential clients. And it's kind of one of those things where I guess a way to describe that is, I do daily briefings for Real Vision about the market. So Real Vision is a platform that's kind of like a financialized TV station. And so I go on that, and probably once every 2 weeks after the close, and I talk about what went on. It's called a daily briefing. And so over time, clients will come to me and say, hey, I've been watching you on Real Vision. I'd like to know more about what you do. Obviously, because I've made some accountable calls over time, right? So the more sort of accountability that you can generate, the more credibility you will generate. So they've seen me make accountable calls. They'd say, okay, this guy, he's making a call where he has his support of evidence behind why he's making it. Let's come back 2 weeks later and see how he did. Right. And so 2 weeks later, they would say, oh, he was right about that. Oil's a lot higher. He said oil was going to rally. So that's an accountable risk manager right there. He laid out the trade, he saw it coming, and it went. Right. And so that's a skill that not everybody is born with. Not everybody can learn, but if you can get sort of better at it than the average bear, that's where people find real value. And that's where you'll learn, people with tremendous amount of risk come after me to hire me as a consultant and say, help me manage this. So then you kind of opened up into a new world where you're looking at things that you didn't know much about, and you're being asked to assess the risk on them. And that's all because you've been an accountable risk manager the whole way through, right? Where people that read you and they continue to see you give an accountable view on the markets, understand what your risk is, meaning I always go into something knowing where I'm going to be wrong, right?
Mhm.
If I buy something at 5, I know that at 4, I'm wrong and I'm gone. Just that kind of mentality, right? Where I don't hold something from 5 to 0, something that I buy that goes down 25%. It's time to get rid of it because the trade was wrong. It was the wrong idea.
Mhm.
So that's where you sort of really, really build value into people, perception of you. And then when you get to work with them as a client, you can build real value into being an accountable risk manager, which
Mhm.
is, more times than not understanding whether the risk is right or wrong to be in something, if that's fair. I hope I answered that question all right, SA. I don't
Yeah,
know if
yeah,
I.
yeah. You did, and I'm just looking at it from the standpoint of like, let's say we're still on the chessboard, right?
Yeah.
And now you have opportunity to play chess, and a lot of times you may be reading because the opening moves are about the same, just like the market. The market always opens, it always closes. There's a pattern to look at. I want you to talk about like books that kind of help you to understand like the first moves while looking at the market that helped you become who you are.
Yeah, I gotta be honest, there's probably, I could probably say that there's 3 super relevant books in my life and career, and they're so much more relevant. It's like 80-20, where those 3 books have like 80% relevance in my world, where the whole rest of the books that I've read, maybe 20%. So one of them is going to be Reminiscence of a Stock Operator, right? That's a really old book about someone that traded, Jesse Livermore, a trader that traded stocks in the early 1900s. And what was interesting about that was an introduction to understanding markets in a different era, before there were computers that printed up the chart automatically, or before there were, real-time prices that came up on the screen so that you could see something trade all day, right? Back when Jesse Livermore was trading, the prices that things traded would get posted up on a board, and he would have to read those prices off of the stock ticker and decide what it meant. But I learned a tremendous amount about understanding price action from that, since he was basically the earliest and the purest form of somebody that understood price action, right? Just from judging how prices, what consecutive prices mean to what the future price is going to do,
Mm.
right? So that is a really, really valuable book and a valuable exercise, because understanding price action is something that you're, in today is absolutely necessary.
Mm.
Another one is called Market Wizards. That's a really famous book that's got stories from Paul Tudor Jones and Bruce Kobner and all kinds of big exchange traders. And they talk about all the times that they've blown their books up and lost tons of money and gotten destroyed and carried out in markets. And you understand why. It's kind of one of those things where the greats come out and talk about both their successes, but also the terrible mistakes that they've made that were really, really horrible trading stories. And so you kind of learn a lot from that, listening and watching to somebody blow themselves up, and start again with a certain amount of money, and then blow that amount of money up, and then start with another pile of money, and then turn that pile of money into billions of dollars, right? Because they had the experiences of blowing this account up once, blowing this account up once to 0. Next thing you know, you learn not to do that, right? And so that was kind of an interesting tour of several different traders' experiences that any new trader should probably read and would get a lot out of. And I think the last one would be a simple book, but it's about this thick. It's called Murphy's Technical Analysis.
Mm.
Got that as a gift from literally the first real mentor that I had at my first job on Wall Street. And he was like, here, if you read this, you'll understand a little bit more about, how things move and how markets work. And I can't say that I read it cover to cover, because it's like a textbook, but I probably absorbed 50% of it and paged through the whole thing and kind of really understood what this guy was trying to put across in terms of methods of following markets using different forms of technical analysis. And then from there, you kind of pick the ones that match up with your brain. You pick the ones that you're comfortable with. You pick the things that, come easy to you and seem to work over time. And then next thing you have your own style of trading and your own methods of, you have a checkbox of things that you'd like to see happening just to get into a position, right? And if you can't check all those boxes, then maybe you don't get into that position at all and just wait for them all to get checked, because that'll increases your probability of being in a winning trade. and you start to develop your system and your way of looking at the markets like that. I say it's just from taking bits of other people's experiences and overlaying them with your experience. And next thing you know, you're kind of thinking on your own.
I think ending that one with the key word of discipline is probably the best way to look at having market success. So I want you to talk to someone that's new going into the market. Let's say like they're 17, about to turn 18, where they can open up their old custodial accounts. They could do anything they want with their money, right? And what words of wisdom would you have for that individual looking to you to follow in your footsteps?
Yeah, man, that's a great question. It's got to start with survival. It's got to start with survival. It's got to start with, it's not a written, I don't have a written law here, but it's one of the things, that is kind of mentally written on a Post-it on my brain by now, where I wake up and I say to myself, okay, no matter what we do today, we're going to live to trade another day, right? Because you can imagine that there's a lot of emotion involved with trading. And what I try to do, and one of my mottos is trade with no emotion, right? Take all of your emotion out of it and be very robotic, right? That's one of the things that goes along with discipline, being robotic, right? And sort of respecting your risk levels, right? If you buy something here and you say, okay, when I lose 10 or 15% on this position, I'm going to get out. You have to actually get out, right? And not tell yourself, well, make up some excuses. Maybe this is just the reason why this is going down, and maybe it goes up tomorrow, and maybe this is BS. If you respect your stop level and you get out of that position losing 10% that you planned on, you did a good job. Because as a trader, you can only hope to be right 55% of the time, right? And with that, the beauty of gaining experience and understanding how hard it is to net make money trading, you kind of protect that much better, right? And you understand your survival skill. My skill is that I can't blow myself up today because I want to be around tomorrow, And I think that's really what it starts. And then you can begin a process of sort of navigating into and out of other trades. But it's all about discipline and survival, I say, because as you can see, if you put a position on and it goes down 10% and you don't get out, right? Say it goes down 20%. Now you've doubled your loss and you still have the position. So you still have a decision to make, right? So you have really done yourself an injustice by not being disciplined when you lost the 10% on that trade. Right. And I focus on, stopping losses when I want to talk to beginners, because that's the hardest thing. It's kind of like it's easier to convince somebody that they've been fooled than convince them that they're wrong. Convince somebody, that they've been that they're wrong than convincing them they've been fooled. Right. So it's kind of like that in trading, where you have to be able to deal with the fact that you're wrong, make a sale and move on. Because if you're only going to be right 55% of the time, then you've got to figure out how to make one of those trades that's right really, really pay off. And so those are some of the things that I think about. That I have a teenager, that I'm trying to get into trading, same age, 17, going to turn 18 soon. And, it's really hard to think about the building blocks that you started from. But I do know that I've had experiences where I've lost an entirely obnoxious amount of money in terms of the money that I started with, percentage wise, et cetera. And that was from pure inexperienced, thick-skulled, not thinking like a trader type of action, right? And when you have that experience, you have the damage and the bruises of losing the money. You have the visceral agony that goes along with it, because it hurts so much to watch money evaporate off the screen in front of you. Those are the things that toughen up your armor and say, no, I'm down 10% on that thing. I got to get out of this quick before I'm down 12%. And your whole posture on the world changes when you're protecting yourself. It's like, I think that's got to be where you start with young people. It's like, make sure that you value the money that you're putting into the markets. Make sure you understand what it means if you lose that. And you got to understand that the number one goal every day is to live to trade another day. So don't put a trade in your account that's going to blow up that account.
Mm.
It's as simple as that sometimes, I say.
So again, kind of going back to your logo, and it's a ship and it's sailing, and again, the market is the waves in this example, right? How
Yeah.
does someone get in contact with you if they want you to help them learn how to sail their own ships?
Yeah, the easy, free, and starter ways are you can follow me on Twitter at TG Macro, right? I give a lot of opinions on there, certainly not as much as I do in my morning navigator for my customers, but I do talk about the things that I care about, and I talk mostly, almost exclusively about markets. I have a free Substack, tgmacro.substack.com. You can put in your email address, and you will get videos that are updates on what's going on in the markets, and they're generally a look at what moved over the course of the week, or a clip from an interview that I do with another trader, and that's free content at tgmacro.substack.com. So that'll get you introduced to the way I think a little bit more. And then my website, tgmacro.com, that's where you can go and subscribe to the Morning Navigator if you're a more active trader and think that, an investment like that would help your trading process.
Mhm. And I think talking about like your two services, I mean, you found a way to monetize not just blogging and interviewing to another level that's associated to actual market. I want you to talk about like how did you come up with that concept? Because most people in your situation, they're more so making capital and making revenue off the active trades, but you've took it to a whole nother level. So I want you to talk about, did you have some consultation with that, or was that just something that through your education over the years you just came up with?
Well, it kind of evolved, over time. When I was a young trader in my 20s at Goldman Sachs, where I worked for 6 years, one of the things that we read every day was a note by a gentleman named Dennis Gartman.
Mm.
And he wrote a note called the Gartman Letter that your firm would subscribe to. You would pay him a fee, and he wrote about markets, and he put it in the fax machine and went out to all of his customers on the fax machine. And we would have one of the young assistants on the desk come out, rip it off the fax machine, photocopy it to 25 traders, and go hand them out to every trader on the desk. So every day you had your copy of Gartman's letter to read first thing in the morning.
Mm.
Now, for a trader, traders are wildly habitual people, right? They like things to be the same every single day. So providing a publication for someone to read that offers opinions, data points, and sort of, stories and narratives about what's going on in the markets is really helpful, right? And it was amazing to me that not everybody read the Wall Street Journal every day, but everybody on the desk wanted to read what Dennis Gartman had to say that morning, right? And so that's kind of when I started writing down notes on the markets for myself. I'm one of those guys that believes that, I write so I know what I think.
Mm-hmm.
You know what I mean? I kind of understand my own thought process much better if I write things out and kind of frame things out that way. So from that drive of saying, okay, I need to understand this by writing it down, I got the ability to be able to look at markets and translate that into a narrative. And it's sort of understanding that, and understanding that that was the talent that Dennis Gartman used to set up his multi-million-dollar subscriber business that every bank on the street subscribed to. I thought that there was a chance to employ that model in this day and age if I had enough, experience, support, and sort of acumen in this trade to be able to do that. And I also had some very recent before the Morning Navigator, there have been, individual newsletters and content creators like Jared Dillian and, a few others that have been writing a note off of their own back every day and been able to make a living off of it, and also sit there and sort of take risk and manage risk in their own account. So, it's been, those were the sort of building blocks that drove me to set up my business this way and see if it would work. And, knock on wood, it over the years it has, since I've grown my business, many times over from my launch date.
Very cool. Very cool.
Yeah.
So this kind of leads me into a bonus question. And for you, it's kind of like there's I have no idea what you're gonna say. I'm trying to guess, but I can't, like, usually like maybe 50% of the time I can figure out who this person is gonna be. But for you, I can't even concept it. So if you had an opportunity to spend 24 hours with anyone, this person could be someone that's in the past that's dead, or someone that's alive today, someone that maybe you've never met before. Who would it be? and why?
Man, oh man,
You're
that's
having a
tough.
difficult time like I had, like just trying to figure out, trying to guess, right?
Yeah, man. Trying to figure out what lane to go down, right? If it can be anybody that you can kind of have by your side for 24 hours, and sort of pick their brain and everything. Man, I have to say it would probably be a professional athlete, SA.
Mm.
And I'm not sure why, but I think that it would be. I think that I would try to look into their like competitive nature. Like it might be somebody like Derek Jeter or Julius Erving, who are like, like two of my biggest athletic superheroes. I don't know that I necessarily picks up. It didn't have to be a professional reference, right? It could be sort of anybody that.
Yep.
Yeah. I would definitely pick. I think, man, it's tough, but I think I would pick someone like that rather than somebody that was in sort of politics or something like that. I kind of, it might be like Michael Jordan or Derek Jeter or Julius Erving or something to kind of. For example, like, I just rewatched, what is it? The Last Dance, the Michael Jordan special. And, I feel like there's so many lessons in there about competition that it's crazy. Right. And that kind of, both how you carry yourself versus the opposition and how you carry yourself within yourself while competing. And I think those are really important things to have under your belt, both as a person and as a trader. It's kind of, figuring out outcomes and understand how you want to position yourself in certain situations. And so I think I'd want to, like really like drill down even deeper into a lot of the things that went on in like Michael Jordan's career or Derek Jeter's career at their most competitive moments. And what was going on in their head and get even further into that if I had to. I think that's the way I would do it. They are both, let's call it Jordan and Jeter, are two guys that I would really, really live to hear about how they handle themselves under the highest pressure situations, because they're both guys that have seemingly performed with no emotion in situations that are so intense and so rife with emotion that as a spectator, I can barely get over it. Right. Yeah. And then here's this athlete that is performing with an unbelievable focus under that pressure and seemingly doing it like they're not even thinking twice about it, like they're not even trying that hard. So I think that might answer the question. I don't know if I don't know if I had a day to think about it, I don't know if that's where I land, but sort of off the top of my head, I say that's who I'm going with.
Well, I think it's parallel to who you are. I mean, obviously, you've traded over 30,000 gold futures, right? And it kind of goes back to what Jordan has said. Like, for every shot that he's made, he's missed dozens of shots. So for you to have 30,000 trades, how many of those trades were bad versus how many of those trades, the quantity and the value of the trades that were successful outweighs all the ones that you failed. So it's one of those things. I think it breeds into who you are. So going into closing on my podcast, and I know that you like to do interviews as well, I like to give you an opportunity to become the host of the Uncaged podcast. I am now your guest. You're now the host. Do you have any questions that you'd like to ask me?
Yeah, I do. What is sort of, when you finish up with a guest, what is the, what are you hoping that you brought to an audience? I know you have guests from every different kind of spectrum, but there's got to be like, what's the thread? What's your central thread?
My central thread is essentially comes back to one word, just legacy. I mean, ideally, if there's an opportunity for some kid that's not even born yet to hear this podcast, maybe 15 years from now, and take what you're saying and how you've used like your legacy of information and growing into an active and successful trader, then this is the opportunity for that person to then grow into following into your shadows. Like I asked you earlier about somebody following in your footsteps. That's what the show is really about. It's not necessarily about the business. The business comes with it. But again, it may be my kid, it may be your kid, it may be your grandkid. It may even be like someone's father that's listening to this podcast and they want to jump out of their corporate America opportunity and step into the market. And this episode helps them to do that.
Really cool. That's really cool. Can I ask you another question?
Shoot for it.
What about where do you see the big opportunities in the new world of media? And I'm talking about where, just the sort of basic point that I've observed that, seems kind of obvious, where sort of legacy media viewership is shrinking. And, you've got things like, Zuby and Elon Musk doing an interview on Twitter, and that kind of thing is getting millions of views, and Tucker Carlson going on his own and that getting support. Where do you see like opportunities for your business in this kind of, and do you see opportunity in the way the media world is very rapidly evolving?
I would say it's a long-term play, right? I mean, obviously everyone's looking for their 15 minutes of fame, but the only way to really get a solid 15 minutes of fame and convert that into 15 years of capital and investments and getting funding or do whatever your big picture idea really is to be consistent with creating that content. Elon Musk did what he did for a period of time, and now he's Elon Musk. But in his early days, nobody knew who the hell he was, right? It kind of goes to everyone that's out there. You may see someone that's 50 years old and be like, oh my God, he must have been doing this for 70 years. In reality, he has been, but now he's a household name because of his achievements of where he is right now. But the legacy of getting there, it's a road, it's a passage that you have to go through. So I would say for me, it's creating content. And it kind of goes back to not creating content at mass quantity, but creating good content that has value, that is more evergreen, that can kind of live the test of time. Because when you do make it, and if that's your goal to achieve and make something out of yourself, when that day happens, all the content that you created before, all of a sudden becomes monetized. All of a sudden becomes bigger than life. All of a sudden becomes retroactive. But again, if you didn't do that, then you're trying to catch up to build that content when you could have a whole baggage and trail of content waiting to be leveraged.
Man, that's such a great angle, a great way of putting it, SA, because I noticed one thing for sure. Your interview of me, who generally speaks to other people in finance, was from a totally different and such a refreshing angle, where you were kind of looking from 30,000 feet up and looking down at what kind of skills I had, how I got there, how I got them, and how they could be used. I thought it was a really, really interesting angle, looking at my business as sort of, as the business run by me, rather than as, what do you think of the markets? I thought that was really cool.
I mean, to your point, I mean, you can go on YouTube and type that in, right? I mean, like, I want people to adapt and to analyze the individual, because to your credit, you are who you are because you're following the patterns, right? But you're also a byproduct of patterns. And I want people to, like, you may be in a pattern right now, but maybe today was the first opportunity for you to recognize that you're in a pattern. And the only thing you have to do now is kind of follow those steps to get to the next level.
Man, really cool. Great observations. I really enjoyed our conversation, man.
Well, I definitely appreciate it. I think anyone that's listening to this podcast, this is one of those episodes that, you have to rewind. And in the early part of this podcast, it was a lot of jargon and terminology, but that was kind of me just building up to let them understand like the quality of individual, who you are. And you're a megamind, you're a mastermind at what you do. And I wanted to establish that. But then as the episode progressed, you're also human as well. And that's a factor to your credibility of who you are and helping people to get on their journey and navigating them to the right direction.
Man, that was beautifully framed, SA. I mean, I don't know if we could say a better word than that. That is perfect. The perfect summation of it really was.
Well, I definitely appreciate it, man. I look forward to following you and following your content. And I'm definitely going to tell my son to sign up for any of your accounts that you have out there to kind of see if he can kind of get some leverage from it. And I definitely appreciate everything you brought to the table today.
That's great. Tell your son and anybody else that's listening to your show, if they have any questions for me, they can email me directly at tony@tgmacro.com. I'd be happy to help them out. Just tell me that you heard from me on your show, and I'll help anybody out that comes with a question.
Perfect, man. I appreciate it.
Anytime. Thank you so much for the opportunity and having me on today. That was awesome.
Pleasure was mine. SA Grant, over and out.